Hey everybody, Boris Lasser from BK Forex. Welcome to our Forex weekly technicals for 126 131 of 14. Risky business. Well, risky business it really has been in the Forex market. Although you wouldn't know it by looking at the euro. The euro has really actually held up very well this week, primarily because the market is kind of looking at European rates as being more competitive than US rates, and it helped actually push the euro up further. Plus the fact that there's been a big revival in German and small recovery in other European manufacturing bases. So the feeling generally is that Europe is recovering relatively well. No further likelihood of ECB rate cuts or ECB easing, and therefore that puts the bid back into the euro. The euro found clear support at the 3,500 level right over here. We bounced back up. 37, obviously the near-term resistance. We failed today. This looks a little bit ominous because we certainly failed off the highs and had a reversal candle pretty much to the lows of the day, which suggests we could consolidate a little bit further, maybe move towards 36 as near-term support, but now 36 really becomes a much better looking support here, and then perhaps consolidate here. A move through the 3750s really puts us on a much more bullish course towards the 38s, and then the very big spike highs here around the 39s. But if we can cross over to the 38s, it really puts the euro on a longer term, very, very positive path, because you see here a series of higher lows. The low here stopped at 35, the low here stopped at 33, the low here stopped at 31, all suggesting that we're really actually in a stealth upward trend technically, and that I think is probably one of the more surprising aspects of the euro trade at the beginning of the year. As far as yen goes, yen was just the exact opposite. Dollar yen was, of course, the conventional consensus long trade, and it looked pretty much like a straight up arrow all the way into the end of the year. And then in January, we really hit a brick wall at the 105 level. Came back down to 103, tried to test it a couple of times at 105 and just got rejected. And of course the very, very tumultuous events in Argentina, the big risk off conditions in the equity markets, the lackluster US data that we've had as of late, all of that putting pressure on US rates, pushing us down. We broke the 104s, we broke the 103s, we tested the 102s today. It looks very much like we want to test the 102s again. It looks like, of course, when Asia opens up on Sunday night, there's probably going to be pretty concerted effort to test the 102s unless we have a more positive construct as far as investor sentiment goes, but doubtful. And now it really becomes a question of holding the longer term supports at around this 105, 101.50 level and the 101 level. I think the overall sentiment towards the yen has changed drastically here, and we're going to have to see. A lot of technical damage has been done. Technical damage was done certainly yesterday, and today the technical damage has continued. It is possible that we could consolidate here around these levels, but the pull towards at least the 101.50s is very strong to the downside now. The upside sees 103 now as resistance, 104 as resistance, 105. It's going to have to rebuild very slowly to come back all the way up to the yearly highs around the 105, and yet it becomes a much deeper challenge for it. Cable also big reversal, and that's a really, really actually sharp reversal here. Look at this. This is almost an engulfing candle. We engulfed out yesterday in a sense that we took out the highs, took out the lows, but we're almost, I think, 2 days worth of engulfing. Very, very close to the lows of the day here at 64.49, 64.50. And cable looks, and this was a function of the fact that Governor Carney basically tried to talk the currency down on the fears that too high a pound is going to cause tremendous amount of export competitive problems. So they really want to bring it down. I think they certainly would love to see it probably around 60, 61. But in the meantime, having breached 65, the next level here of really true support is going to be 63. That's probably going to be the near-term low for this particular leg. Generally, when the pound starts to turn, if you look at this structurally, rarely does it sort of have well, here's a corrective turn over here where it did create another high and then turned a little bit sharper. But generally when you have big sharp turns, there is more continuation in the pound, and it lasts considerably significant amount of time. So this is a corrective wave, this is a corrective wave, this is a corrective wave with a nice big reversal, this is a corrective wave with a nice big reversal, and therefore this looks to be the starting of another corrective wave with a nice big reversal, now possibly moving us towards the 163 as we go forward. If you look at the Aussie, the story here is, I think, actually possibly a little bit more positive. Certainly, I believe that the Aussie decline here may have finally exhausted itself for the near term, not for the long term, but for the near term. Simply because when you look at the structure of Aussie, and of course Aussie was down because of problems with China, commentary from RBA officials that they want to see it further down towards 80, and it is certainly under a lot of pressure. And there isn't too much positive data on the book next week to really want to make you want to get bullish Aussie, but there is potential here for at least a small dead cat bounce for the pair. For now, the absolute critical bottom here is 86.50. If that can hold for a day or two, if 86.50 sort of holds for 1 or 2 days, that would give a lot more confidence to the thesis that the Aussie may have bottomed out in the near term. The reason I say this is because when you look at the structure of Aussie, one of the key elements of this whole decline has been lots of decline, then a consolidation pattern of about 3 or 4 days before fresh bad news and fresh selling brings it down. So we may be in this kind of a similar pattern where we are going to be testing the lows and possibly creating some short covering rallies. Not too much. I don't think 80. I think 87.50, 88 is pretty much the top out of any kind of a short covering rally in the Aussie, barring some completely positive change of tone in the investor sentiment. But in the meantime, the downside certainly is pretty clear. 86.50, I think, is the key hold. If that holds for a couple of days, that provides a greater thesis for the idea that we may be rallying back up to 88 on the Aussie. All of that brings me to the point. Sorry, let me just finish up with dollar CAD. Which also is confirming sort of this idea of exhaustion in the commodity decline. We saw the move towards the 110s. It exhausted itself at 111.50, and now we seem to be crawling right back down. Certainly now 110, which was former resistance, becomes big support. And if you're going to correct, this is probably going to be the natural area for buyers at the 110 level. But there is a potential here to correct all the way down to 110 in the CAD. But all of this actually brings me to the idea that if you have the commodity currencies kind of slowing down for a potential short covering rally, then you have to look at the crosses, and especially, in my opinion, pound AUD as a big reversal trade. Here's a pound AUD, just a complete flame out. Now, the trade here, I think, is pretty clear to the short side in the sense that the 192 is the top here in pound Aussie, and a decline below the lows over here at around 189 effectively seals in a top formation and puts us on a path back out towards the 185 correction. And similarly, pound CAD also, oops, sorry, let me just pull this up. If you believe that there's corrective forces in the majors and the commodities have kind of stopped correcting, then pound CAD looks to be very toppy as well, and gives us an opportunity here for scope for further correction, perhaps all the way down to 180 on that move. But in the meantime, these are the themes that are kind of, I think, are going to be dominating the beginning of the week. The last thing that I kind of just want to look at, we don't look at this very frequently because it hasn't been a story in a long time, but dollar Swiss, especially the Swiss franc, has certainly strengthened up this week big time. And the fact that it's strengthened up this strongly is an interesting look here for potential for perhaps a retest of the yearly lows at the 88 level on a longer term basis. So strength in the Swiss franc also suggests that if you're sort of betting on this majors correcting, but the Swiss franc holding firm, look at the pound Swiss correcting here very sharply all the way out to the 47 level. The break at a 47 really creates an opportunity here for a run all the way to 46 and perhaps even a test at a 45s. That is in many ways one of the most interesting corrective trades into the beginning of next year, next week. So anyways, I wish you guys the best of luck, the best of trading. It should be a very interesting week next week. Volatility has certainly come back, and there are a lot of interesting constructs that are setting up technically. Boris Schlossberg for BK Forex, over and out.